Roelof, what's wrong with these figures? Good morning to you.
Good morning. Yes, well, these figures are just so misleading. And I just want to mention that I'm in very good company when I say that, because the OECD, in their statistical sort of manual, warns against the methodology whereby you take a quarter-on-quarter growth rate, or the lack of it, as that SA has done, and then you more or less extrapolate that into the future on an annualized basis. So you multiply it by a factor of marginally less than 4, which is totally ridiculous. And what the OECD warns against is that what you are doing now is you are magnifying the irregular. So if you have a really bad quarter, as we obviously had in the second quarter, why would you want to assume that this is going to repeat itself? The recommended methodology is to simply take the value of our GDP in the second quarter, which includes radio services, agricultural products, platinum, gold, vehicles, food, anything you can think of, goods and services, dry cleaning services. The total value of our production, you compare that to the same quarter, April, May and June in 2019. And then you find that our economy produced 17% less, which was to be expected because we closed the place in April. But if we look at just 1 month's general dealer retail figures, retail sales in June this year. So total retail sales of general dealers was 40 billion rand. It was 2% higher than in June 2019. And this totally contradicts the message that SA is trying to send out. For the life of me, I do not know why they are driving us to, medicine like Prozac.
I mean, I was going to say that your figures are a lot more palatable, and this is a really dangerous message coming from what you say is a negative methodology or not fact-based methodology. So you wonder why they insist on doing it this way. If we've got this confused message coming from them, what sort of impact on business sentiment?
Well, with a bit of luck, business leaders in South Africa and people in general will interrogate the data a little bit, because I'm using the same data. I'm using the data that Stats SA gave me. So they tell us what we've produced in the second quarter in these 3 months, April, May and June, which were a disaster. And they told us a long time ago what we produced in April, May, June in 2019. And we produced 17% less. Why would they want to multiply this by more or less 4 and tell us this is what happened? This is not what happened. They are trying to look into the future and giving us a totally wrong message. And I know I must question their agenda. I don't know why they would choose to use a methodology which is clearly not recommended by international statistical organizations of the stature.
So what factors do you think are at play? Is politics, possibly?
I'm not 100% sure. I don't want to stick my neck out too far, but they have a choice in terms of which of these two growth figures, because the 17.1% year-on-year quarterly growth, in real terms, adjusted for inflation, that was published by them as well. And that is much more accurate. So, and what is interesting is that now in the third quarter, because of the fact that the third quarter is going to be magnificently better than the second quarter, because of the easing of lockdown regulations and the V-shaped recovery, which is evident in the economy, they're going to make the same mistake. So instead of comparing, July, August and September, with the same 3 months last year, they're going to compare it to the worst quarter this economy has ever in our history experienced, and they're going to multiply by 4. So
I feel your exasperation there. I
yes,
really
no,
do.
It's very frustrating.
Yeah. What do we do with your figures then? I mean, what will be the drivers now to this fantastic rebound that you predict?
Right now, with the lowest interest rates in history, in South Africa, you find that all the mortgage bondholders in this country, and there are millions of them, are paying less if they choose that option on their mortgage bonds. In the case of my one son, he's got 3,000 Rand a month more in his pocket today at month end than he had in the beginning of the year. And he's not going to save it, I know him well. He's going to spend that money. So the lower interest rates are going to have a huge impact on lowering the cost of credit and the cost of capital.
And that'll get money back into the economy, which we so desperately need.
Exactly, and then government's 51 infrastructure projects totaling 340 billion rand which some of them have already started. The mortar has already been laid. This is unbelievable news because it's in cooperation with the private sector. President Ramaphosa's new approach towards economic policy, through a partnership approach with the private sector, is going to pay handsome dividends, and it is a 180-degree departure from the ridiculous and absent growth-orientated policies that we have had under the Zuma administration. And people should recognize this, that there's a paradigm shift in policy in this country, and we are going to have a bumper fourth quarter, and we are going to have great growth next year. I can guarantee that.
You know what? You've made me feel a whole lot better, so just let's leave it there. It was very good to talk to you.